So the signal bar completes the setup. For example, here's a spike, high 1, first pullback, second pullback, so there's a high 2. Hi everyone, I hope you're well. My name's Tim Fairweather, one of the presenters in the Brooks Price Action Trading Room, and we're doing our second pilot of a Euro stream. So thanks very much for everyone for jumping on. Thanks for all your feedback and your support for the last session. If you've got feedback or suggestions, please just tag Richard. For those who may not have been in a Brooks Price Action Trading Room before, we're in the Discord, which is the Brooks Trading Course community. You can find that on Discord. You just go to Al's website, the Brooks Price Action website, and there'll be a link there. We're in a channel called Trading Room Chat. You're welcome to tag me. My name's Tim F. I'll be in blue on the stream. I'm just taking a look in the Discord. Awesome, we've got some regulars in here. Hi Nutmeg, hi FJ, always in. Raulo, g'day Matt, Mulder, Pavel, Ron, NB, Leon, Jigs, OX, and Sean. Fantastic. That's fantastic. Awesome. Okay, so we're going to take a look at DAX and FTSE today. We're just going to follow the same system that we would typically do on ES. Price action is fractal. All the same methods apply on every chart. And I think they're useful for determining probability. And we'll give them a go today. Hi, Red. Thanks for jumping in. So let's take a look at DAX. On my setup, I've got two moving averages. I've just got the 20, which is our standard one. And then I have a 200. The 200 is essentially the 60-minute 20-bar moving average. Is there anything magical about the 20? No, I don't think so. But if you use one, great to keep it consistent. You can use others. What was really funny in Orlando at the trading conference we did there is almost everyone had a different moving average. It was fascinating. And so there are ways to use all of them. So on my DAX chart here in TradingView, I've got the FDAX, so I've got the futures continuous contract, and I have a couple of sessions. I'm able to pick up the 24-hour chart, 24-hour chart. This will be your ETH. If you're using a CFD, that's also going to have the 24-hour chart. It's a bit easier to read because it doesn't have gaps on it. So I think a lot of traders prefer to look at that. We've got etc., which is the RTH trading hours I'm going to use, and the Frankfurt has a bit of pre-market. So I'm going to use the overnight. So weekly chart, we've had 1, 2, 3, 4, 5, 6 full bars up. Market tends to flatten out after about 5 or 6 bars. I don't know why this is a magical number, but I suspect because traders that bought earlier are sitting on big profits, and the maths for doing the other side starts to get really good. We have broken above a prior high, and we've got a doji bar. The doji is an indecision bar. It's a pause. It's a reduction in volatility, and traders are wondering, are we going to get follow through above that bar? Are traders happy to buy outside of this range for the first time? We'll see. I think because this was such a deep pullback, traders will start to sell. Where are they going to sell? Probably at the high, 50% up, just betting this gap's going to close. That doesn't mean just sell the market, just means on the weekly chart, I'm expecting a bit of overlap here. We went sideways here before. We'll probably go sideways there again. So this is the 24-hour chart on DAX. You can see we had a strong spike, and we've been going up in a channel. So the spike is the high momentum part of the move, and then we have a pullback. The first time we go below the low of the prior bar, maybe here, definitely here, and then we start channeling. So the move flattens out, and we usually get a couple of legs. So spike 1, 2, are we in leg 3? Yeah, that makes sense. Some traders just see everything in terms of 2 legs, and the second leg is broken up into parts. That can work as well. if you look at the last leg in here, this has also got 2 or 3 parts: up, pause, up, pause, up. And then at the moment, we are essentially gapping down from yesterday. On ES last night, if I can just jump across for a second, we had a similar pattern where we've been going up in a small pullback trend, far from the moving average, a couple of legs up, and we were expecting a pullback. Traders stop buying above the high. Once there's a deep pullback, they buy below, and then they use the highs as an exit instead of an entry. And they trade it that way. So that's what happened on ES overnight. And so will DAX do similar? DAX has been a little bit stronger than everything else. So let's see what's going to happen. I think the low of yesterday is going to be important. Still, bears have been unable to do much, unable to close below a prior bear bar. Hi, Lewis. Did you mention EMA 20? I did. That's this one that's sitting on my charts. So we looked at the overnight. This is the RTH chart. So this is the regular trading hours. So far, it's been, do you buy that bull bar? Pause. Okay, I'm going to buy the close of that bar after it triggers. Okay, so instead of buying above, you wait for the bar to close, gives you a chance to enter, increasing your probability. You got a 1R target. Okay, and then how about doing that again? There's your bull bar. Am I high in a trading range? It triggers, you're able to buy, and it doesn't get you up to 1 times from the high. It does get to 1 times from the close of that bar. And that's very common in channels. So when you have a very strong move that's moving quickly, traders here selling below, selling during the bar, doing all they can to get short because there are no pullbacks. Once the move has been going on for a while, instead of buying a full position above something, they're trying to buy below, they're trying to buy into the buy zone of the bar, so the lower 50% of the bar, waiting for a pullback and then fading that pullback, betting that's not going to reverse the move. Variety of strategies, but they're not putting a full position at the high. So does that make sense so far? I think it's good to have a bit of daily context. So if we get some big moves at some big prices, we can kind of line it back to price action. I think the most difficult part of trading is the feeling at the start that there's, institutions with all this secret knowledge and secret setups, and, you have this constant fear and doubt of your own ability, and you need to find a way to improve that self-talk, to improve your practice, to observe your mistakes, so that whenever that pops up, the idea that there are people out there manipulating the markets to take everyone's retail money. No, retail market is such a small percentage. No, they're just taking money from each other. They're institutions. You've got to assume that everyone knows everything about the market. And those secret setups, even if they existed, someone would put so much money in them, eventually whoever was on the other side would stop taking it. So as Al says, if you're sure, you're 60% sure, and if you're not unsure, you're 40% unsure. I think that's very helpful. When we came into the session the other day, I drew up a couple of spikes. We had spike, channel, spike, channel, spike, channel. This last part, we've also had spike, sideways, spike, sideways, spike, sideways. This is not going to go on forever. What's the next market structure? What's the next phase in the market cycle after a spike and channel? One before that, there's one before it, which is actually probably the trickiest part of the market cycle. So spike and channel, broad channel, thank you. So a broad channel is quite a special kind of channel, and it's constantly trapping you into selling a measured move at the bottom, only for it to come back up. So you start to get very deep pullbacks in a broad channel, okay? So in tight channels, bears are lucky if they get one leg below the moving average. But if we switch this chart to overnight, you're going to see bears are able to switch the market always in short. and then you go below a layer of support and you think, aha, measured move down. I know how to trade this. I need to sell the bottom tick. And then you go, no, that's right. Broad channel, I know what's up. So I'm looking to buy at the high. You buy at the high, doesn't go anywhere. Now you're buying the top tick. So it's a trading range, but it's slanted in one direction. So you can usually go up a higher time frame, give the extra 5% probability to that. So for me, because I'm above a 200 moving average, we're probably in a bull broad channel. I want to be very careful selling lows. Another way to talk about it, Al talks about a double bottom bull flag. It runs the stop for that double bottom, and then you get a new high. So here's a swing stop, bottom of a leg. It runs the stop, then gets a new high. That's what broad channels do. So for bulls, if that was a prior high up here, 24,000, we went above, and we're hovering around 24,000. So let's put that on the chart. That's going to be our magnet today, I think. 24,000 on the chart. So we had a strong bull day closing above it, and let's see if it's going to act as support. I made a video on pre-market drills that I think are useful. One of them is called Good Signal Bar Live. So I go up a time frame, so 60-minute chart or the daily chart, and I look at who's got a good signal bar. Well, bears have got a good signal bar here. Bulls, not that one we went below, that we went below, that one we went below. So I think every 60-minute signal bar for the bulls, they've already got 2R. So I don't care about them anymore. I'm just going to assume they're going to take profit. So at the moment, we've got this signal bar coming into the session. So a bear could be short on a higher time frame here, stop above, they're okay. A bull can be long from this signal bar with a stop below or somewhere down here, they're okay. What about this one? Well, I'm going to assume they could take 2R, so they probably did that. So that gives me a bit of a battleground to judge the price action. Does that make sense? There's a video on the channel, just go to Zen Trading Tech. I think it's a short video anyway. If you look at a lot of trading ranges on the open, you'll often find it's a fight between 60-minute signal bars. Hi, Matt. That's asking, does the pre-market bear move put us always in short? Well, we were definitely always in long up here, and then we've had a strong reversal. So that for sure puts us in a trading range. So we've flicked always in long. So the question is, does that suddenly make it always in short? For me, not. We never went below that spike, which is here. But we're definitely in a trading range, and we're probably in the low part of this trading range. So the question might be today, so this was yesterday's price action. Now we're in the lower third, trying to get a feel whether high time frame traders are buying in the lower third to get to the upper third, that'd be 1-to-1, or for a new high, that's going to be a swing. Or are they going to find more sellers here and at 50% to come back to these lows? And to give you an example of that, here is a daily bar. Coming to the session, we open in the lower third. Traders bought it with a stop below the low. There's their 1-to-1 target. They got there, and what happened? We got 1, 2, 3, 4 bear bars in a row. Okay, so those traders, they're not holding for a new high, they're done. Bears are going to do the opposite. They sell with a stop above there. Does that trade work? Yeah, they get down to the lower third. But we don't get the same reaction from the bulls. So in trading the day before yesterday, the day before yesterday or yesterday? I've done too many live sessions. They actually held into the low. So that's one way you can use higher time frame bars to kind of get a sense where the swing might be. And then let's look at today. Today, this is the signal bar, and we're going to, where are we opening? We're going to open about 50-50. F Brink, if I'm pronouncing that correctly, the 200 I've got on the chart, which means I can then switch between all time frames. If I have a 60-minute 20-bar EMA, it's going to vanish on those time frames. So I just keep the 20 and the 200. For example, if you drop this EMA on there and say 20 on the 1 hour, it's going to be very similar. See? So the moving average is a zone or a band. It's not like a magical line in the air. It doesn't exist, but that's why they're basically bang on. Hopefully that helps. But you find one that you like, and that just be consistent with it. Though I'd probably stay away from moving average crossovers. I lost a lot of money on that trading system. My goodness. Oh dear. But if you can make it work, awesome. That's a daily bar. We went below the low and found buyers, found a new high. So the prior high of that day, I think, is important. High of yesterday. Because if we think about a stop entry, there would have been traders that bought on a tick above that bar. They got filled, and then now we're down here. In a bull trend, traders that do that have a very high probability of getting out break even, either at their original entry or buying lower and scaling it. So I call that the highest high one. So we've all done it. You bought the top tick, or you've sold the lowest tick, the lowest low one. So I pay attention to that in a trend. Okay, I've spent too much time on DAX, haven't I? Okay, I can get rid of this channel. We've seen the channel. So we're in a trading range, maybe 23,950, 2,400. So we might have some climactic moves up and down. Just to get a bit of a range for today, you can use the average bar range. You can use ATR. Difference between ABR and ATR is the average bar range doesn't include gaps. So an average bar for DAX is 250 points at the moment. If I go to the RTH chart, it's about 280. So 280, 250. So Al says a swing is about 40 points. Sorry, 40% of a day's range. So that's going to be our swing target. Might just write some of those down. So we had 250 to 280. So that swings, 80 points or so, and then a scalp's going to be 10%. So about 25 to 30 points. So they're your effective scalp sizes, swing sizes. If you're usually trading ES and you want an equivalent, because that's how you trade, I would use something like that. Does that make sense how I did that? My ABR lookback's 8. I experimented with 4. I experimented with more than that. 8 works well. But once again, if you're changing it every session, that's going to be difficult to stay consistent. Okay, that's looking good. That's looking good. So FTSE's a little bit different. FTSE, we didn't break above a prior high. We're coming back up to this range. So 8,800 was my long-term target for FTSE. We got there, and then I was asking myself, I wonder if we'll get another leg, but we did not. We just collapsed back to the 200. The 200 here has been a buy zone all the way along. Now we're back up high in a trading range. Bull micro channel, traders buying below bars. And we've got probably a stronger setup than DAX in one sense. We've got a lot of bull bars and then an inside bar. Inside bar is a pause, up, pause, up, pause. is this leg 3. Is it going to behave like ES and drop down to the moving average, bears scalping for a couple of legs sideways, or are we going to find buyers under that bar? 24-hour chart. Because it's 4 bull bars up, I think the probability of this working is low, but I think still bulls wouldn't want to trigger going below that bar. So low is 729, 729.5. So it's half a point away from triggering. So if it can hold there, then the target would be back to 8,800. 60-minute chart. We had a spike, pull back to the breakout point, another leg up, new spike, test, and then break back in the range. So on FTSE, we've got a trading range between here and here. Bears probably want a second leg sideways to down, but bulls have got gaps below. So I think this will be one to watch. Do the bears get one more bear bar? But I'd be hesitant to sell too low. Trading ranges often give you signal bars right where you don't want to be doing anything. They give you the bull bar right at the high, they give you the bear bar right at the low. So high Reza, can you just tell me which instrument you're talking about? RTH? It's a bit trickier this session because we've got multiple instruments. Oh, nice, on DAX. On the RTH 5-minute chart, do you see a parabolic wedge top for yesterday? Yeah, well, I've got, you've got 3 clear moves, up, up, up. This leg itself is a parabolic wedge, up, pause, up, pause, up. So Al would say 2 legs sideways to down, and then a second leg, because this is actually a breakout on a higher time frame. Okay, this is a breakout over here. The cursor will flick to where I'm talking about, so it's going to, all the charts are lined up, but the crosshair or the hand is going to show up. Maybe I'll use this to help. Here is a breakout, but this breakout failed. So if you're a bear, you want to get below here to get a measured move down. So Reza's saying broke below, yeah, on the overnight, so not yet on the RTH. So yeah, we broke below, but we didn't run the stop of that spike. But we haven't tested the high. Am I looking at the same thing you're looking at? Because on the, oh, you're talking about this piece here. So parabolic wedge, so that price structure needs to correct 2 legs, 1, 2. Because it's a breakout on a higher time frame, it also needs a second leg, which it got, and now this price structure is complete. If this day kept on going, you'd expect breakout mode triangle until the next structure sets up. So same here, up, 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 2 legs sideways, and then there's a little breakout mode in here. A trader's going to buy for some kind of symmetry with this, or are we done at 24 and we're going to roll over? Well, even if you waited 1, 2, 3 bars, 4, 5, 6 bars, buy signal, buy signal, buy signal, you had time to participate in that move. The ability to stay out of the market in breakout mode, I think, is a super useful skill. But you've got to do some boring practice on price structures. So, going through the material from the course and then saying, okay, I'm going to find double tops, higher high double tops, lower high double tops, double bottoms. Where does a double bottom get a measured move down? Where does it fail? It's that kind of what I would call boring work. That's why I call them drills, which is going to help you, or help the imagination work in real time and help you place a trade. Here's a double bottom in a bull trend. Most double bottoms in bull trends hold. We get a new high. Here we got a new high, then failed. We got a measured move down. So it's like a very specific drill work on charts. I think it's good. So a couple minutes to kick off. Let me check if did Richard want to jump on and say something? Hey Richard, if you needed to jump on, let me know. If you want to introduce anything about the Orlando conference, we've got the confirm. So we're going to have the Orlando conference in October this year. I believe it's the 4th to the 7th. Probably at the Florida Hotel. Again, great room. Gets better every time. More screens, better Wi-Fi. It'll cover a weekend, so we'll get a couple of days of presentations and then a couple of days of live trading. Really great event. Mo, the symbol I'm using is the FDAX continuous, so the 1 apostrophe. That's it, Wolfie. New conference. So this is still a bear spike and 2 legs sideways. So bears are like a sell signal on the 60-minute chart here for a second leg down. Bulls had a leg up. Their stop didn't get run. So because we've got reasons to be long, low in the trading range, bears want a reason to be short, pull back for a second leg down. We're probably going to have a bit of a trading range on the open. We had great prezos last time. We had Tom Hookard did a great presentation. We had Tim Stout did a cool presentation on becoming consistently profitable. We did Brad Wolf had a prezo on always in. Ali Moin Afshari did presentations on aligning setups to different parts of the market cycle and scalping. And Al did a great prezo on swing trading, scalping, investing and trading. Yeah. I'd like to do a presentation this year. I'm just sketching it out. Okay, so on the RTH chart, so if you're using the overnight chart, you're not going to have a gap, but we've gapped down from yesterday. So I take a fib from yesterday and say, okay, where are we in yesterday's bar? Around about 50%. Lower third is down here. Oh, I didn't talk about yesterday's trades at all. I did nothing in the first hour. Gap down, sell signal didn't work, but you could have been long. You've got 3 or 4 bull bars looking for a second leg sideways to up. You had a high 1.6. There was your 1R. I sold the reversal. Good looking reversal signal bar, excellent entry bar and follow through on 15. So I sold small and then I had an order to sell above 15 to swing down. And I took it back to the open. So I didn't get this bit down here. If you sold here, you didn't get a second leg. So if you're a second leg trader, you take a high probability trade, oh, you take a loss. Now you got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 bull bars. Some point in here, you decide the probability is pretty high. We're going to have a second leg up. And depending on where you took that trade, I would say consecutive bull bars closing above the moving average. We're always in long. Buying there with a stop below 42, there was your 2R target. So if you did nothing here, okay. If you did nothing here, okay. Once you see a strong reversal, okay to take a trade with a swing risk reward. I'm always suspicious of micro channels on the open. So a micro channel is where every low is above the low of a prior bar. So if you zoomed in and you're a trend trader, you've got nowhere to pull your stop up. It's a great setup for a second leg in any other part of the day. On the open, it's usually a good recipe for a reversal. You know, traders buy below a bull bar, they get stuck, they buy in the midpoint, they get stuck, and by the time they decide that trade's not working, the reversal gets the second leg. So, okay, so first bar of the day, currently big bull bar, bull's trying to close on its high. We went down, we went up, so a bit of trading range price action. we broke below a bull spike here is the measured move, that whole spike. And sometimes I'll use the measured move from the higher low. We're not quite at that measured move. If we don't hit that measured move, we're probably going back to the breakout point. Now, this is what happens in trading ranges. You get close to one-to-one, doesn't work, we come back to the breakout point. I'm going to wait for consecutive somethings. Now, if you're looking at the 15-minute chart on the overnight here, we've got a breakout and the bulls want follow through above this range. So they might look at that whole range and look for a measured move up to 24,100 up there. But the 15-minute chart's going to need... Oh, I haven't set up my live data on FTSE here. So FTSE, we've got a big bull bar closing on its high, but all the overnight price action is very sideways. So we need breakout and follow through, or breakout and a test to hold. I don't want to buy high in a range. So Al has been doing homework every day as well as trading for the past 4 decades, and he's put together this document called his Encyclopedia of Chart Patterns. So it's very reasonably priced. Highly recommend getting it. Firstly, to learn different price structures and how they tend to play out at different times of the day, but also as inspiration to set up your own encyclopedia. So I'm in gap down, 4 common outcomes, spike down, creating a double top for a swing down. Basically sideways, a couple of legs up to the moving average, a couple of sell signals for a swing down. Move to the moving average, a climax to support, which becomes the low of the day. Oops, let's go back. Or continuing down to a low of the day. These are 4 common outcomes. There's, of course, bull trends from the open, bear trends from the open. But we're usually betting on, if it's a gap down, a swing down in the first hour or two. And it makes sense from a breakout perspective because this is a gap down, that's a bear bar. So the bulls have to work really hard to convince traders not to sell pullbacks. Hi, Lewis. Yeah, the 20 and the 200 EMA. Thanks, Reza. So far, more sellers than buyers above 1. One of the problems the bulls have on this chart is, where does your stop go? You don't have a good stop location. If you're a bear, you can put a stop up here. But you don't have a signal bar. If you are using the overnight chart, you have some options of a stop, 23,980 down there, 24,000, but it's pretty far away. So you've got a stop that's a swing down. Zach, can you use the same gap down principle on FX markets? Yeah, absolutely. It's not something I've researched specifically, but anytime for me there's a gap, I just say gap, breakout, spike, it's all the same thing to me. Highest likelihood is that there'll be a second leg in that direction. And we're talking, 80 to 85% probability. So in terms of a structural edge to trading, I think it's good. Why is it difficult in practice? Because you don't know how big that second leg's going to be. It can be very small. Doesn't have to be symmetrical. It's rare to just get A, B, C, Ds. But some traders do trade that. So, hi Zach, it's just something you got to test. I think, try and get samples of those setups with, you're talking about the Asian trading range or not, and just see what the hit rates are. See if you can, if the stats change. So it's a low one short below 2, but the stop is far away. It's up there. I think at the moment, best choice is flat. I just pay attention to the first sell signal on a gap down or the first buy signal on a gap up. Hi, Red. Red's asking about signal bars. So I think Al's explanation is probably the best. Every bar is a signal bar, every bar on the chart. But we need to understand the difference between a setup and a signal bar. A setup is when you think a pattern has completed and that there's a chance there's going to be a shift in value for you to take a trade. In which case you're waiting for a signal bar, which is going to tell you the exact price you want to get in. So the signal bar completes the setup. For example, here's a spike, high 1, first pullback, second pullback. So there's a high 2 above that bar. Or if you don't trade inside bars, there's your high 2. So that's the signal bar for that setup. And because you have a clear signal bar, then you have a trigger price for your trade. You have a very precise place for your stop. And then if it fails or works, it's really easy to build a strategy out of that. But because every bar on the chart has buyers and sellers, and they're on all time frames, every bar is a signal bar. Yeah. So if you want to understand more about signal bars, I would find the setups that you like to trade and then research those. So a high 2, any two-legged pullback in a trend, and then you flip it for a trading range. So in a trending environment, high 1s, high 2s, trend continuation. When the market's going sideways, high 1s, high 2s are reversal setups. So then you just have the one setup and you can develop the skill in both phases. For reducing down the testing. So 3 went below 1. So far bears can be short below 2. Any trader that bought below 1 probably had to buy more below 1 as well, and they wanted to get back to their break even. I was distracted. No, okay, so they haven't got back. It's better if the bulls get stuck above for the bears to get more legs down. Okay, so if they can get back to the 2 low, which looks like they're about to, yep, okay, so no bulls are stuck. Because we need stuck traders to push the market in a particular direction. So in a trading range, right here, no one's stuck. Okay, you buy that high, you're able to get out. You buy that high, you buy more lower, you can get out. You sell here, you're stuck. You sell higher, you make a profit, you get out. As long as everyone can trade and get out of those entries, we don't have to leave the range. Can I confirm that's what actually happens? No. But if you trade that way in a trading range, you'll find it's very gentle. So if bulls bought, they bought lower and they got out, well, bears now sell from move down. I don't think bulls have a good stop location, so I think we're going to go lower. Yeah, it's very forgiving. So if you like to scale into your trades, and I would encourage everyone to experiment with not doing that, just prevent those ridiculously oversized losses. You just got to be careful you're doing it in the right zone. So if it's consecutive bear bars, it's potentially a short below 3. I'm going to wait and see what happens. Okay, so triggering the short below 3. I'm going to wait and see a breakout and follow through. So this bear spike, we've gone up, sideways up. Bears want to get a second entry sell. So bears getting a breakout and follow through. If they can get a good close 4, probably good for a second leg sideways to down. Oh, thanks, Leon. Yeah, we do have some news So we've got PMI in 30 minutes for Euro, and then we've got some FTSE news in an hour. It's not typically a huge mover, but yeah, thanks for bringing that up. Okay, so on FTSE, big bar, no follow through as yet, but 15-minute bull bar. So if bulls can get another bull bar on the 15-minute chart, probably going to find more buyers. But I don't like how overlapping this is for a stop entry. That's the breakout point. If you find you take a lot of losses in the first, say, 3 to 6 bars, go and research the open and look at the number of reversals. Often the open will have 2 reversals, creates a range, and then we break out. We can have up to 5. So the least common type of open is just trend from the open. It's like 20%. A lot of opens have gap down, 1, 2, 3, 4. We break out. 1 reversal down, up, 2, down, 3, up, 4. Double top and double bottom, measure move up. Gap down, reversal up, 1, 2, 3, 4, 5. Measure move down. So all in short, some bears sold the 3 close, some might be waiting for 4 and then put an order to sell the 3 close. It's a good 15-minute signal bar for bears. I'm currently flat, trying to see if I can get a pullback. So gap down and first bar of the day was a bull bar and then 3 bear bars down. Okay, so it's just filled me on that pullback at 3. So I'm short with a stop above 2. So if this trade works, super. If this trade sets up a second entry long anywhere in here, I'll probably choose to manage out of that trade. If this bar just turns into consecutive bull bars, then I'll get stopped out of that trade and then probably form some kind of a trading range. So I'm effectively trading the 15-minute chart. This is my signal bar. And that means I've got 9 minutes to see the follow through on it. One of the mistakes I constantly made was zooming into a lower time frame. It's like a false sense of security because the higher time frame lasts longer. So if we're always in long on a higher time frame, that's probably going to count for more than some very small trend bars on a 1-minute chart. I think we're always in short. We've got a gap down, so I prefer to be trying to sell. Other traders are going to wait for a breakout pullback and then a sell signal, so a low 1 short. So if this is sideways and then another sell signal. I won't be scaling into this trade. I don't scale into trades on the open because there are so many reversals. I don't want to turn a bad short into a 3 or 4R loss to kick off the day. I tried that for many years, and it's a lame way to trade, so I don't do that. The volatility is larger at the open, so that means scaling into trades on the open with larger volatility is like steroids for losses. That's it, Wolfie, many times. I've got screenshots of just so many days where I've taken a huge, you take like a 3-hour loss on the open, and then you trade like a champion for the rest of the day just to get back to break even, just to get, slightly below. It's a miserable way to trade. Human nature, we've just got to make that mistake like 1,000 times before we learn it. So bears see this as a pullback to 3, pullback to the 1 low. Bulls on a higher time frame think, oh, yep, look, we're low in a trading range. Okay, so far, bulls are getting a good reversal bar against 3. If it closes like this, I might move my exit back to my entry. See what happens on this close. Outside bar, so bears are short below 4 as well. Okay, so it's just taken me out of that entry for break even. If 6 is then a huge bear bar and goes to target, well, then I'm trapped out of it. El Rolo is saying not scaling, also not scaling into winners. Is that a question or a statement? That one. Oh, you mean making sure you do scale into winners? So I'm just trying to get the phrasing right. Yeah, so I would not scale into losers on the open. Yeah, basically, just keep the trade management simple on the open. Oh, it's going without me. Sad face. Why set the stop at break even? Yeah, so I'll wait to see the follow through on the 15-minute chart now, and I might re-enter that trade. Reasoning is we've got a gap down and a bull bar which triggers. We get a new low of the day and we close back in the range of 1. So this is not a strong bear spike yet. This is a channel, and I'm selling at the low of the channel. So I might see if I can find a way to take a channel entry. You know, if 6, 7 goes to target, I'll miss out. Still always in short, still gap down, and we've got, we're at first measure move target, and we've got a second one a little bit low. We've got some gaps from yesterday. Yeah, OX, just on the open. Because statistically, there's a lot of reversals on the open. So I prefer to have tighter management, which means if I miss out on those trades, that's okay. Then that'll keep me flat. You know, the range is 70 points, and we need to do 270. So there's plenty of time. So 6, you got a low one short, either below 5 or on 6. Spike, pause, spike. Nothing for the bulls to do. In hindsight, I could have put my stop above the bull bar, but hey, hindsight. So if you sold below 2, you got your 2R target. We've got a low one short below 6. So consecutive 15-minute bars. We're down 24,000. Nice, so 15-minute bears, 1R. So it's interesting when looking at yesterday's price action, we were at the lower third and didn't find any buyers. So that might mean the bears can keep pushing after a pullback to yesterday's low. Nice map, fantastic. I had to sell small at the 6 low, so I have to use a different size because the stop's wider. So far, it's been all bears. When will you consider drawing the bear trend channel line? Well, at the moment, we've got spike, pause, spike, and then we're probably leg 3. Traders who are selling the low 1 on the 6 close or the 6 low, everyone's going for the low of yesterday. So if I was a bull and I wanted to buy, it didn't work here, it didn't work in the lower third, so on a higher time frame, I don't think there's any reason to be long until we get down lower in the range. This is a strong breakout and follow through, so if it closes like this, this probably needs a second leg sideways to down. You can see when 6 closed for that low 1 sell, strong tick gap. That's a lot, 20 and there's about 5 points missing there. Any bulls that bought here and bought there have to quickly sell out. So even if we pull back, I think this will get a second leg. Okay, bears closing below 24,000. Still, we've got tails, so you've got counter trend traders, but still nothing for bulls to do. Okay to be short, okay to be flats, nothing to buy. 15-minute bears have got consecutive bear bars now here, so I'm watching the 6 low because we've got a small gap between the 6 low and the 8 high. That gap stays open. A measured move is basically that low of yesterday. Is it reasonable to limit sell at 6 low, stop above 5 for 2R? Well, it's a weak signal bar because of the tail below, so we might come up and test the close. Yeah, you can have a stop there, or you can use a wider stop and then leave some to scale in. And then if the bulls get a couple of bull bars, you just shut it down and move on. But there are some traders who are selling, the 6 low or somewhere in this bar, betting that the first bull bar is going to fail. Bulls tried once, twice, didn't go above. Al has some slides on what he calls a sell climax. So on the open, looking at what happens when the market just drops down to a particular price, and then that's it. So here he's waiting for a couple of reversal signal bars. That's a bit more complex. Here it's a late leg, but typically his slides wait for a second signal bar. So you drop down to a price, you expect it to go down, and then 1, 2, 3, 4, 5, 6, 7, 8 bars later, you give up on that premise. Or you rely on your stop. Back into this trading range area, back to 24,000. So traders short on the 15-minute chart, traders short on a low 1, traders short on consecutive 15-minute bars. Better if it's a bear bar. Okay, so bear inside bar. So that's the end of another leg. 1, 2, and we'll see what happens on 9. Today's going to be a gap down and a bear trend from the open. Here we had a small range and then very strong spikes. Very difficult for bulls to make any money. Here just a sell climax. Bulls not up in the morning until they had a wedge. Same here, spike, pause, spike, pause. So let's find a parabolic wedge, gap down, PW. Bulls always want the opposite. They want this to be a spike to the low of the day. Bears here that sold had no chance to sell the moving average, and they lost on this breakout trade. We've come all the way back to where they took that loss, but this is quite a lot of momentum down, so will the bears get another good 15-minute bar? Gap down, parabolic wedge bottom. Bulls need a couple of reversal signal bars to get back to the moving average, or here's a very strong signal bar. Very strong signal bar. I wouldn't usually take that first one, but once it triggers, I'd usually take that second one. Days that do this are rare, where the signal bar triggers, runs, everyone stops, and that's the low of the day. That's quite rare. Nice, we should test to the 7 low. So 8's an inside bar, so technically the tightest stop is there. Or you're trading the 15-minute chart, so your stop's further away. Okay, so 3 consecutive bear bars on the 15-minute chart. It's a couple of legs down for the bears, but still nothing for the bulls. Bears got a gap on the open. We broke far below this breakout point. We then broke far below this larger range. And we've got consecutive bear bars. So bulls probably need 2 attempts to reverse this. So on the one hand, if you use a tighter stop, you're going to have a smaller loss in your distribution of trades. On the other hand, that tighter stop, when you've got context of a tight channel, is going to get taken out and then often be met with a new low. So you just got to weigh it up. I'm still short. Oh, thanks, Red. It's testing the bottom of Asia. I mean, it's a bull spike in a trading range. So the lower we get, the better the maths is for the bulls. So their probability is low, their risk is small, their potential reward is large. But I think probability is still on the bears at the moment. Short from the 6 low. So I took the original breakout and then closed back a break even. So then my next entry is going to be a breakout pullback low 1, which is 6. You had a couple of entries, times to sell 6. You could have sold it as a 7 went below, or on the test back on 8. Okay, nice. A couple more bear bars. So we should get below the 7 low. Now that we've got a new low, now my stop can be above 8. So essentially it's break even. I don't have any risk on, so how can I put more risk on? I need another signal, but leg count might trap me out of that. What I mean is I want to put more risk on, but once the leg count gets to 3 or 4, the probability goes down. So if you get a good reversal and that reversal works and you've taken some off, then if that leg's strong and the probability is still high for a second leg, then you've got chances to put it back on and see if you can turn a good trade into a great trade. Also okay just to let it go, wait for the next trade. So 15-minute bulls got 1R and they got a close below 1R. So now they've got a potential 2R target a little bit below. Spike low 1 sell, their target's a little bit below, and if you sold below 6, measured moves down here. So, someone asked about getting trapped out. Sorry, I didn't answer that one. If you're trapped out, I think you've got 2 correct choices out of the 3 possible choices. So if we're always in short, you're either short or you're flat. That's what Al always says, and I think that's really good advice. So feel good about being short or feel good about being flat. If we are all in short, so we're in a bear breakout, the only wrong answer is being long. So don't see flat as being wrong. As a scalper, you want to be flat most of the time. So when a surprise happens, you're ready to take that advantage of it. And it might take a bit of self-talk, a bit of retraining, even if you've got to say it aloud to yourself. Like, okay, we're short, at least I'm not long. Most of the charts that traders send me, you know, we've got, 4, 5, 6, 7 bull bars. Traders are selling and scaling into shorts here. But better you do nothing here than be short. I think just fixing that alone is going to make a big difference. NB saying the only reason I'm trapped out is because the entry isn't something I rehearsed. Yeah, okay, so you didn't have a setup for that situation, so you didn't just invent a trade. Yeah, that's good. Yeah, some more homework. That's brilliant, man. Think of a professional sports person. They don't start inventing moves in games. The games for stuff that they know works well. Like if you're on the rugby field, you don't just suddenly come up with a new pass, because then the other team get it, they score a try or a touchdown, and then you look like an idiot. You know, think of like professional games where, you know, someone should have just taken the tackle, or someone should have just run the ball out, and they do something silly, the other team get it, run to the other side of the field. And you're like, man, that's just not necessary. So strong bear micro channel, bulls have got a reversal bar, but it's not something I'd ever buy above. So the only buy above is to exit a short position, I think. Or you have your stop above 8 or higher. So we've gotten to the low of this 60-minute bull signal bar. So we had our two 60-minute signal bar lives, and then we broke through. Now we've just gone below that. So we might need to come back to the midpoint of that bar. If a trader buys there, buys below, can they get out break even? We also used yesterday as a range, and we said to ourselves, well, will they buy the midpoint? No, we've got a bear bar there and follow through. Are they going to buy the lower third? No. Okay, well then, if traders are not going to buy in this lower third, there's a chance we can go and test lower. So we had a couple of chances for sure. Hi, Pavel. Scaling into bad trades, it's a tricky subject. It depends on the setup, depends on the signal bar, depends on the context, depends on the open and the day structure. It just depends on so much. I just can't give any general rules apart from experiment not doing it. I had this belief for a long time that as long as I scaled into trades, I would be protected from harm. But the exact opposite was true. I just lost tens of thousands of dollars. Not in large amounts, just slowly every day. So if you're a market maker, okay, so the exchange, Eurex, pays institutions to act as market makers, liquidity providers. So that every time you press the button, they have to take the other side of your trade. Now they can scale in. Okay, they've got ways they can do that. They see a big bar, they fade it. Okay, so while this is going down, they're buying and buying lower. And they're going to make money. They're big businesses. They've got lots of people. They always make money. Can we do it? No. So if you've got a setup like a low one short, spike pullback low one, and you say, okay, I'm selling later than I want to, so I'm selling smaller than my account size, then I've got one additional bit of ammo for that trade. So I really want to put the full position on. That's different from we go up, we're in a bull breakout, and then we get a doji and saying, oh, if I sell there, I'll be able to reduce my loss because the probabilities are shifted. So yeah, I would look at your setups, look at the parts of the market cycle and really zero in. If you can, I'd just bin it, is my personal view. For example, you buy here, no scaling, you get a second leg. You buy here, if you just exit and take a loss, you're ready for a second leg down, third leg down, fourth leg down, fifth leg down. You scale in here, you scale in more, you take a huge loss in here. By the time you get flat for this spike, now you sell again, and you take another loss. You're just totally out of sync. So by taking a loss, I did something reasonable, I took a loss, I had a chance to make it back and then get back to plus. So scaling, in my view, takes you out of sync. But if you've got a system where you can do that, all the power to you. Because otherwise, you buy here, you buy more. Okay, I'm going to buy a measured move down. What point do you stop? Now you're long one contract, two contract. Now you're long 4 contracts. And you're desperate to get break even here. But if 12-13 does this, you're taking a huge loss. Okay, so we've got the close of the hour. We've got a big bear bar closing near its low. Consecutive bull bars both weak. No one wants to buy above those at the moment. So if you're a bull and you buy and put a stop below 11, that stop's probably going to get run. 15-minute chart, 3, pause, think the 15-minute traders probably need a second leg down. Is it going to come here or here? We don't know. I'm still short, waiting for these bulls to get stopped out. So now you've got bulls in the market, but this first reversal attempt's still low probability, I think. So 8 low, 12 high, test. Nice, JC. Thanks for saying that. Those bull bars are more likely profit taking than buying. So there's bears taking profit off the table and probably looking to keep selling if they get more signals. The mistake is you're flat and you look at something that's low risk and then decide that's a good trade. That's not. Probability says that stop's going to get run. So bears have actually got targets, 11 low and below. Bulls haven't made money on 1. They could make money on 5. Looks like those 15-minute bulls are deciding what to do at 1R. Oh, sorry, 15-minute bears, rather. 15-minute bulls are not even in the market. There are 2 ways to reduce the risk of your position if you get uncomfortable. One is by closing, reducing your size. The other is moving your stop towards your target. Okay, never away, so towards. So if you have a far away stop, you can bring it closer. Now your risk is reduced. I would experiment with both of those. I think the default is usually, better close. So if you bought 11 and you saw 12, you probably hit sell the market to get out of your long. 12 is a bad follow through bar. And then bears do the opposite. They see 11, they wait and see the follow through, and then they sell, knowing they're going to get out. Anyone that's buying here has got small size, wide stop, and they're looking to buy low. They're saying, yeah, we've had a gap down, we've gone 100 points or so. We've gone 100 points from 2, a couple legs sideways to up. Ways to manage your trades. 1, rely on your stop. 2, exit a tick above a very strong reversal bar, or after 2 or 3 consecutive opposite bars, or a scalp size above any bar. It is a late leg. Okay, so 3 bars in a row. So if we start going above 13, some bears will get up. If you think about every pullback, it's a reversal attempt. So here, this bull bar is a reversal attempt. Then when we go below it, we say, aha, that was a pullback. And the same on 5. Okay, it's a pullback. And usually what has to happen is this reversal attempt has to turn into a trading range before the reversal has a good chance of success. So going above 13, that's going to take traders out. Swing points above this inside bar, so other traders will have a stop there. So that just took me out on 13. And then if you get another signal bar, you can sell again. So bars are overlapping. So it's still more likely a bear flag or a final flag. So far, stop entry bulls haven't made any money. Limit order bulls could buy below, but they can only just make a scalp. So it was 48 on half and just under 20 on the other half. Shoulda, woulda, coulda had an additional 30, but we're still able to participate. So it's interesting for bears here. They've had a spike, a pullback, the low 2 sell. The low 2 is at the bottom of the range, but they're hopefully going to trigger it. 15, good signal bar, but sideways. So we'll see if there are more buyers or sellers here. Because the leg is late, I'm not going to take that signal. Hi, Ted. Ted's asking about shaved bars. How would you manage a position? Yeah, so same again. What's the setup? What's the signal bar? What's the context? What part of the market cycle are we in? Give me a bar number. Give me an entry. Where's your stop? General advice is not so useful. So 15-minute bears getting their second leg down. Yeah, so that's, I want you to think of a particular bar, a particular setup. It's harder this way because we naturally love general trading advice, but it's nearly useless. If you fit any strategy you have into a particular part of the chart, you'll find all your hit rates go up. So 7 is a shaved bar. That was the low one sell. Bang. As soon as that triggers, bulls sold out of their longs because their signal bars didn't trigger, and bears sold for a second leg down. Bang. Here, gap down and a low one sell. Good signal bar. Bulls got triggered. They can't buy anywhere until they get to the low of the bar. You go straight down. But they're relative to those parts of the chart. So bears trying to get to the low of that bull spike. Hi, Dennis. Is it too early to place a sell after shave bar 3? Well, 3 hasn't broken out of anything, but 4, now you've got to break out and follow through. So 4 is also shaved. So that gives you the confidence to trade for a second leg. On the open, I don't like a close back against my entry because I like to be flat for reversals, and that means I had to exit and then get back in at a lower price. But then you've got 7 is your entry bar. That's shaved as well. That should have a second leg. So a few legs down in a bear channel, you can see bulls are buying lows to make scalps, and they're going to keep doing that here. So we'll probably transition into more of a slope channel trading range. We got to one of the targets down there. 15 is a breakout of 14, and we're testing that price. Some traders will take that as a sell, breakout, pullback. Because I think the leg count is late, I'll have to let it go. Leg count's kind of like a filter, so if you use it, it will bring some trades in and get rid of others, and that means you'll miss out on trades that work, but then you avoid some that don't. So, yeah. Bears got their second leg on the 15-minute chart. Looks like 16 is going to put us into a trading range. G'day, Jay. Possible trigger daily sell. Nice. So on the 24-hour chart, we had a big bull outside bar, and anyone that sold below that low got stuck, could sell more, and they got back to their price here. So it looks like we're coming back into the lows of this bar to find buyers. I'm not sure. Looking at the overnight chart, a lot of sideways, around 24,000. So you've got a good-looking buy signal, pause, bull bar with a tail, not a great buy above. Outside bar never triggers. So strong reversal 16 back to 24,000. So traders that are still long either have a stop above 14 or a scalp above any bar, which is probably going to take you out around the 14 high. Just because these last bears are getting out of position doesn't suddenly mean put a buy order on the top of anything. We've been going down for the past hour and a half. I'm in no rush to buy above anything. Bulls don't have a signal bar, so a lot of this buying is bears that finally hit their target on the 15-minute chart. Some traders like to do stuff on big bars. I do nothing. That's a don't touch. Let's just put the market into a trading range, and we're probably at the high side. So we had a gap down low 1 for potential sell. We had a bear spike on the 15-minute chart with a sell and a low 1 sell. Then we had 15-minute second leg down to the lower of the range. So we got some of that right. I could have traded it better personally, but something I can look at after the session. Like I said, at least I wasn't long. So back at 24,000 now. Can the bulls get follow through buying above this? Yeah, I see everyone's pretty excited about doing things on big bars. For me, I wouldn't sell and I wouldn't buy, because I think the odds are the next bars are going to go sideways. If you sell, for example, let's play through it. If you say, yep, well, 16's a bull close in a bear environment should get a test down. You've got to go and look at 100 of those trades where if you sell, because the minimum stop on a sell like that is 1 or 2 times higher. And sometimes this is going to get run. So as long as you can trade it to a reasonable risk reward. Okay, so we just ran the stop on 8. That's actually the second swing point. So bulls might see a measured move up to the 1 close, and their pullback swing buy would be here. So what I'm saying is you take out a bunch of swing points, you pull back, and then traders that buy here are looking for the low of the day. Bears are waiting for this reversal attempt to fail. Low 1, low 2, low 3, and go sideways. On the 60-minute chart, bulls can argue it's the first bear close in forever. So is it really that bearish? Traders are waiting to see what happens on this bar. Bulls can get good follow through here, increases the likelihood that any pullbacks going to be bought, make a higher low, we'll get some kind of major trend reversal. So we ran the low of this bull bar. So that signal bar we had drawn out, we're back in the middle of that 60-minute bar. If you bought above, you bought below, this is your break-even point. All right, so 19 to me is not conclusive follow through. So if you're buying, you've got to stop somewhere down here, but your 1R target's pretty far away. So you're saying there's a 60% chance we're going to come all the way up to bar 1. So if you're a bear, you were short here, you had your stop hit here, or you had your stop here on 8. Bears had a reasonable signal bar 14, triggered 15, and then they were unable to get out without a loss. So I think the 14 low might get tested at some stage. So bulls want 15 to be the low of the day. Big bull bar 16, so you expect a small second leg sideways to up. Not great follow through 17. Can they get 18, 19? I think, for me anyway, the probability is a trading range. But we don't know, are we high in the trading range or are we low? Is the trading range up to here? Is the trading range here? We didn't run the stops on the daily chart. I think the 14 low is a target. New low 15. A bear bar 18 would be a low 1. Bears might need a low 2. Low 1s and high 1s in trading ranges, lower probability. It's a high 1 by 18. So good looking 15-minute bull bar here. So reasonable signal bar. If that triggers, bulls have got a chance for a couple of legs sideways to up. In an ideal world, I'd like a test down before buying. So I have to make a call on the reversal. Currently flat. Oh, hi Mo, sorry, your question. Bar 16, broke a trend line? Yes, and might argue that 18 is a bull bar, we go back up to the start of the channel. Yeah, so you're saying the spike. So where's the start of your channel? 2 or 5? You know, spike first pullback 1 or spike first pullback 5. One of these. Yeah, I think that makes sense. The question will be whether we do it on this move or we go down and do it later. Climax is I find quite difficult to trade. One of the challenging parts of climaxes are, so we're talking about limit order bulls. They see these tails, they buy below and scale in lower, and they make money. The next time we go below a low, they buy. So that climax is not a signal bar for them to enter. They're already long. They see this as huge win, so they exit. So climax bars are the profit for a limit order trader. Whereas if you're waiting for a signal bar, you're hoping this is going to be the start of something. Can the bulls get consecutive bull bars? Yeah, I need a pullback to buy, so I'm trapped out. Testing that gap, testing the moving average. Can the bears get a sell signal here? So that trade, I'll put it in blue so it's a bit easy to see, or what I understand of that trade. Here is a bad looking signal bar for the bears. So you buy there, either with a stop one range away, or you have an option to scale in there, and your target is we're going to get above. So you buy there, goes half against you. So you have 2 times actual risk, you have 1 times initial risk, and that's your trade. Okay, so 19, bad follow through for the bulls on that high one. For me, I prefer to buy higher or I prefer to buy lower. If this is a trading range, pullbacks are going to be deep, so you've got to be careful on your size. I don't think 19 is a very good sell signal, but I'm wondering if bears will sell again. Hi, rookie. Am I happy with the follow through, or what's that for the bulls? No, because it's making me buy with a risk of 60 points. So I'd like a good looking signal bar that's small, and it's a climactic signal bar. See if we can find, climax bar. There's a chance we can test below it. Climax bar, test below. Here's a bear climax bar. I mean, a very large bar relative to the bars around it. So it worked, but it worked an hour afterwards. So this bar worked. We went sideways. We got a second leg up, tested, and then. Sorry, I've been neglecting FTSE. Well, I've been in DAX positions. This is the difficulty with trying to trade 2 instruments at the same time. Thanks, Leon. Yeah, if someone's in a FTSE trade or they're trading it, just let me know and I'll flick back and forth. Otherwise, I'll just kind of got to stick to what positions I'm in. So we're still in a bear channel, but same again. You get a big bull bar 16. No one wants to buy above it, so they usually become bars that traders buy and scale in lower. I don't look at any correlation between FTSE and DAX. Personally, I did a small, unsophisticated study on it, and I thought, you know what, I'll just trade it separately. I'm sure there are ways to trade the correlations. So bulls still going sideways to up. I mean, if this keeps going up, at some point, you've got to hit buy. We're probably above 2 of the last swing points. I might have to wait for consecutive bull bars above the moving average or some kind of a pullback, let's see. I said at the start of the session, if this is a trading range, we get a spike pullback for a low to sell. If that's a small bar, traders will get a chance to sell it. In trading ranges, you often get very large bars, making you sell at the part you don't want to. I don't know if anyone remembers me saying that. Traders got the big sell signal low, and now we're pulling back up into this range. So if this is going to be a trading range here, then that might mean wider stops here. So we broke out of that. their test targets, hit that. Hi Mo, are the EU sessions going to be regular? I'd like them to become that, if that's possible. You know, maybe a couple of times a week. Probably just have to find a way to do it with my regular trading. It's obviously way more relaxing trading when I'm not streaming, but it is, it's good fun. And if it's still profitable, even better. Mitch is saying, hi, I found on range days, high probability we come back and test the London Open by 11:30. What do I think? Hey, I haven't, it's not something I've tested, but if you've tested it and you like it, then trade it. It's good to find, you know, little pieces to put the edge together. I think there's a common misconception. We think there's like a big edge that we can find in trading. It's actually like a lot of small edges, like trading fewer instruments, trading at the same time, trading the same setups. If you're not clear, like right now, it's not clear for me, so I just don't place a trade. You know, trading the same number of bars every day. You know, if it's 3 hours, it's 3 hours. Don't just suddenly decide, oh, no, I'm just going to trade midday, or I'll just trade the close. Kind of, you know, put your edge together that way. I like to use higher time frames. Hi, Jigs. It was difficult to trade from Australia because of the trading hours. But you can trade Euro, you know, it's like 7 p.m. Sydney time. It's basically impossible to trade US. I had to get up early to trade the close. But you can trade Aussie futures and you can trade, you know, Hang Seng or Nikkei. I found them a little bit more difficult to trade personally, but other traders love trading Asia. So, but yeah, if you're in Oz, trading the US market is going to be a challenge. So we're in a tight bull channel. We're transitioning back across the moving average. We're in a bull micro channel. So this is strong enough, I think, for a second leg sideways to up. Bulls would like a good follow through bar here. So interesting, that wide stop I was talking about at the start of the day, you put a stop above 102 and you take that low one sell. Interesting, right? Definitely something to research. So we're probably always in long. It gets more always in long with 21 closing above 20, closing above the moving average. If it's a trading range, the bulls need one more bar to lock it in. So 21 is important. It still looks like it's going to be a bull bar here. Why is Hang Seng and Nikkei? Oh, well, they're more difficult for me to trade. They're probably not difficult for other people to trade. I find there's a lot of reversals on the open. It's very climactic. I think because US has been closed, Euro's been closed. So, you know, it was easy for me to make sizing mistakes. Don't know. So when I looked at all my results, I was like, okay, I'm great at DAX and FTSE. I'm great at ES. Hang Seng, okay, Nikkei and Oz not. So just do less of them. Yeah, no worries. So just you know, just check your results, and it might go through phases. I went through a year where FTSE was just my best. It was just so in tune. It was ridiculous. So I just stopped trading a lot of US and just would trade the whole Euro session. I didn't even trade much DAX. I was just in the zone, in the FTSE zone. I got so upset because I wrote all these market reports and so many of them were bang on, and you'd look at the views and there's like, you know, 11 views, which are probably from, you know, my PC, my Mac, my iPad, my phone. So whatever. It's probably more balanced now, I think. Reza, this is great. You're saying this is where I get confused. Yeah, it is confusing because you've got a bull spike crossing the moving average. Bull's not able to get a pair of bars above the moving average. We're in the middle of the day. So for bulls, their stop's down here, which is too far away. They want a higher low to move that stop up. Because if you're buying here, where's your stop? Now you could put it at 18, That's an inside bar. That's one possibility. I don't like it because it's at the 24,000 magnet. So it's a good chance we're going back there. But if you're confused, probably just wait for more information. This 5-minute trading range is definitely a trading range here. Two good looking bull bars below the moving average and sideways here. So the EMA gap bar sell, that's a setup to go and research. What's the hit rate on it in general? What's the hit rate in a bear trend from the open? What's the hit rate when we've got a parabolic wedge and we've got a strong micro channel against it? So whatever setups you like to trade, go and do a bit of work on that. For me, I'm not interested in the moving average gap bar sell after 3 legs. That to me is different to this one here. This one is very strongly bullish. First pullback in so many bars and then up. And this move is overlapping, pause, dojis. So it can still behave the same, but you've got to run the numbers on it. So first bar of the day on FTSE, we said, here's a breakout point, here's a tight trading range, I don't want to buy above that. It gets bad follow through, we go below it. So anyone that bought up here, measured move down is the target range breaking out to the downside. Bears get consecutive bear closes and a pullback sell. So it's always in short on FTSE. Maybe to the lower of that range. This spike is different from the DAX one. We had a spike pulling back to the moving average and a good sell signal here. So there's a 60-minute sell on FTSE. On DAX, we're sideways. Interesting. So it's a sell signal for the bears on 22 after a couple of legs up. Bulls probably don't want this to trigger. Yeah, thanks, Reza. Does that help? So it's like an impossible task if you look at trading, as like a one-day career. But if you go, okay, moving average gap bar. Okay, today I'm going to look at 50 to 100 charts, just get pen and paper. What's the hit rate? Okay, and then, whatever it is, let's say it's 60%. Okay, where does it fail? And then you go and look at all the failures and you go, okay, well, it fails when the move coming into it's really strong. The hit rate on these might be 50. So you just start getting a little bit of detail around that setup. Where should the stop be? Should the stop just be really tight? And if it gets run, let it go. Awesome. So bulls want this to be a second leg up, but a sell signal, the moving average, gap down, everything's been bearish. If this gets follow through, I'm more inclined to look for the sell signal. Or if you're a 15-minute bull, your second chance to buy is here. So we'll see. NB's asking, how do you balance trade rooms, real trading versus back testing? Should we only do the former once we're all set, or both at the same time? Yeah, great question. So when I did Al's course, I was in Australia, so I couldn't attend the live room live. I had to watch the recording, and that worked really well for me. Listening to someone else trade while you're trying to trade you're going to make mistakes. You're going to not take trades that are in your plan that would have worked, and you're going to randomly take other trades that don't. It's confusing. So I would try and do a little bit of study, a little bit of trade room, a little bit of solo, and just do enough to take notes on and just pick an area of focus. Right? For example, if it's a moving average gap bar, that's your focus. And then everything else you just write notes on, and that's your list for when you're like, okay, I'm going to do some work on something, go back to that list, the things you found interesting, go and research those. I would be spending my time in sim, so market replay, trading live with a real account, very small. small as you can. Personally, I'd stay away from prop firms because it reduces the emotional sensitivity, because you're getting a big account for $100 or whatever. It's a bit confusing for the emotions. But part of trading is training those emotions. If you find you're making too many mistakes during a live trade room, maybe find another presenter. Or no, just turn it off, watch it later. Write notes and then listen to it later. Like if you listen to Al, he'll often call things out earlier in the day that you think, nah, I don't think so. And then later you're like, oh, he was right. Okay, so consecutive bear bars, you can have more bears, I think, taking a shot as a sell in a trading range. They're probably going to sell and sell higher. Bulls see this as a strong bull micro channel. They want a leg sideways to up. I think both have got a reasonable case. Oh, nice, you trade Hang Seng. Yeah, it's fun to trade. If you can get the opens right, or you can, sometimes I'll just sit out the first 6 to 12 bars and wait for everyone to work out what they want to do. I think if I had the skill to reverse correctly, I'm just not very good at reversing, but just HSI gives me this feeling if I was good at reversing, that would work well. So I don't think the bulls did enough on 21. They might get another shot to do it 24, 25. I think it's a sell above and maybe a buy below. Bears, their target, 14 low, somewhere back in this range. Bulls have got body gaps up here. Will bulls buy a high one above 23? I think it's a bad looking high one. Probably going to need a bull bar. So I've sold small above 23. I've got a tight stop. Coming up to the close of the second hour. So we had big bear bar, first bar of the day, and we went below it. Now we've got a bull bar with a tail on it. I think there's a chance we'll go back to the 12 close. That would be the 60-minute bar one. Close, perhaps. Okay, nice. I got a good entry bar. Let's see if we can get some follow through. Hopefully the bulls are bought on 16 and they're not still around. This is going to be a very short trade. Nice OX. Glad you enjoyed it. Yeah, hoping to catch you in Orlando. Cheers. Yeah, good point, Reza. Both EMAs flat. So then I think to myself, okay, the EMA is flat. We tend to close gaps. We just don't know what order we're going to do it in usually. So there's gaps above and there's gaps below, for example. I think it pays to be a little bit slower with stop entry trades. Like 23 triggers goes above, 24 triggers goes sideways, 20 triggers comes back. So 4 bear bars down. Can the bears get one more? Very 50-50, I think. Nice. So I just scalped back part. So selling above 23. I took it off a point or two earlier, just at that 18 low. So I get in trouble from the purists for doing that, but that's an inside bar. So outside bar 24 strong enough for always in short. Yeah, it's interesting. I think the important thing was 21. So Al used this concept of one more bar, and the bulls really needed 21. Well, that's why I harped on about it. So if 21's a bull bar, we've transitioned back across the moving average, traders are buying with a wide stop, okay, that's probably a swing. Doesn't happen, 3 consecutive bear bars, okay, well now we know we're high in a range. So, but that's a really good one to research. What do bears need? They just need one more good bar here. Just a good looking bar here or here or here. No. So then that we go to run that stop. Here, this transition, No one bought above that high. Traders bought the close. It wasn't until that close they bought a test back, and then that price seemed to be the inflection point. Is that the right word? Maths was a long time ago. I think it's inflection point. Nice, we're back at 12 close. So I haven't taken any longs today. I sold 3, made a mistake getting out, had to sell again 6, which is okay, sold, added on, and then got out at the 15-minute target, and then took a small scalp on the second part of that position. I missed the bull leg up, and then I sold 24 on the 23 high. Thought that was good enough for a second leg down. Back to 18 low, which was the last leg for the bulls, and the other half to the 60-minute chart. The arguably better target for bears was probably the gap to the 15 high and 14. So this was the last good-looking bear entry, which is the test target there. So perfection is something I'm aiming for, and I'm happy when I can execute reasonably. Like I said at the beginning, I think you can do really well with a couple of concepts. One is focusing on always in, which side's got a stronger breakout, and then only trading in that direction. If that means you're sitting on your hands through a whole swing, who cares? That's going to save you way more money in your trading career than trying to become the world's best counter trend scalper. You know, here's a bull spike. You're not convinced? Okay, just don't do anything. We're below the moving average. We set up bear bars again. Okay, it's probably always in short. So the challenge is to come up with your own rules and follow them. FTSE's still going down in a bear channel. So for example, if you like reversals, you have taken any number of losses on the way down here. So just getting rid of reversal attempts when we're always in short is going to save you, 3 or 4 losses every time we have a bear channel. Okay, so back in the middle of a trading range, this is a good bull spike. We got back to 60-minute close for the bears. We got back to that gap. We got back to the test target. 5 bear bars. So, does this get a few more legs down maybe? Will the bulls who thought this was a good price before suddenly appear again? Oh, someone asked about yesterday's low. Yeah, it's interesting. Hey, the maths was good here. I can't prove most of what I'm saying, you know what I mean? I just look at a lot of charts. So you look at the lower third. If a trader bought there, their stop never got run. And we come back up to that zone where they get a chance to get out. So unless they get run over, or you look at the 50% of that higher time frame, if 50%, not 50 cent, if 50% is going to work, then 2 is going to be a bull bar. This is just going to rocket back up. So still always in short. This swing point is a bear bar. And this is a 15-minute close. So 15 close, next magnet, yesterday's low. Hi, Chris. 3 legs down to bar 15. Yep. 2 legs up to bar 21. Yep. Leg 1 down and pull back. Yeah, on a higher time frame. Yeah, that makes sense. So you got a bear micro channel here, pull back, and then a second leg down. And this second leg can have a couple of parts as well. So usually the second leg has the angles a bit softer. So you have a strong momentum spike, and then the momentum usually wanes. That's the right word. It's rarer to have this second leg just straight down. So you're saying 23,650. Oh, you're saying this whole spike. Yeah, I thought about that earlier. I think this breakout point here, which is where we tagged before, I think if we can close below that, then I'll start measuring those targets out. I have this weird behavior when I start drawing far away targets, my trade management for my current trade becomes a bit silly. I don't know how other people deal with that. As soon as I start putting targets, 100 points away, I become like Mr. Invincible. And I don't follow my trade management rules, so I try to balance that for myself. Yeah, you start drawing all these targets here, and then you wonder, oh, okay, why didn't I get out after the 4th or 5th bull bar? What part of the 4 or 5 bull bars was not bullish to, you know what I mean? So I can't change that bias, but I can. So I just focus on the nearest target. It's a bit embarrassing, but I also try and have targets in both directions, because the number of days where you got like lots of bear targets and it just becomes a small pullback bull trend that just gets these crazy breakouts. And so to me, I just feel like everyone was holding short. Yeah, Reza, that's a good question. So Reza's talking about swing points as being major or minor. So for me, this one's major because of what comes out of it. So this move is the biggest move of the day. So that to me is always the main swing point. So I pay attention to the smaller ones, but I tend to look at it more as a trading range. I'll give you an example. So on the way up, these are all swing points. And if you get too easily shaken out to sell, you would have taken many losses. But if you look left and go, okay, where did the strongest spike come from? From here. Or maybe here. Or maybe four bull bars, maybe it was here. So then your swing point, you're saying, okay, well, until they run that stop, I'll just bet every reversal attempts at trading range. So that's one other way to approach swing points. So it'll reduce the magnets you have on your chart, which is always good. So your next major one, probably somewhere down here. The other way to look at it is just go up a time frame, the 15-minute. This is a bear micro channel. So does the swing point really matter in this micro channel? Well, there's no swing point except the high. So traders just sell above the highs of these bars, betting the breakout's going to fail. The bear's working down to 15 low, 15 close. If the bulls are going to turn this into a lower low major trend reversal or a high low major trend reversal, 1, 2, 3, 4, 5, 6, 7 bear bars is not the way to do it. So I said before I wanted a small reversal bar to buy. I don't want it after 8 bear bars. I'll let Goldman Sachs take that one. If you take the gap and the range of the day, it's about 230. If we take the range of the day, it's about 150. So I think we've still got range to go higher or lower. Let's look at ES for a bit of a comparison. So the reason I talk about ES is because at the moment we had a small pullback bull trend, and then yesterday, weak signal bar coming late. Eventually if you buy high late, you're going to have to deal with one of these. So if we go back to the 60-minute chart, bulls tried to reverse, they tried to reverse, strong signal bar, second leg down. So try and remember that pattern. Strong signal bar, they're hoping this is going to be follow through. What would I need to sell again? I need a new low. Yeah, and B, you can use a runner. That's a good way you're kind of just training out the every move against me is a good reversal. So then if you're taking part off, that's profit. You're moving half to break even. I'd also experiment just leaving the stop where it is. So even if the stop gets run, it's still a break even trade. Because breakout points just get tagged all the time. I mean, my breakout pullback trading strategy relies on those stops getting run. You know what I mean? So, if you sold 6 and you get 7 and you move your stop to break even, I'm selling on a limit order around that area. So I'm counting on it. So, and because that's a high probability strategy, because I know how good that hit rate is, I will typically not put my stop to break even. So it's kind of funny, you research a strategy and then it impacts how you manage your trades, because you're like, oh, I can't do that because I know that if somewhere's going to get hit, it's going to be that point. But yeah, something to test. And I think if you split your testing up into the market cycle, that'll help as well. Okay, I mean, a strong breakout, is it a channel? Oh, I've got no idea what it is. It's some kind of trading range. And then you can modify it a bit. Could you do it if you sold 2? Well, I did. Well, on 2. 2's early in the day. So if you sell 2, you get the greatest entry bar you've ever wanted in your life. So out of all the times you're going to take that trade, this is the time where it's got a good chance of going much more than it usually would. So here's a strong breakout bar. The stop for me would go above that breakout bar. So it still wouldn't go at break even, and go above that. Pavel, the indicator for high 1, low 1. Man, I tried to code it. I'm not great at coding. And in trying to develop for the code for it, I looked at so many charts. Now I just see it automatically. So I became the indicator. So I reckon that's a good way to do it. I'm sure someone who knows PineScript and wants to spend the time with ChatGPT and knows Al's material could do it. I think you just got to love coding, hey? It's got to be, yeah, you want it to screen through the instruments. Yeah, that'd be dope, because you could run it on the daily chart, 60-minute, 15-minute, and then just go, which one, I reckon when we go to Orlando, because I think Ali's got a systematic scalping, what does he call it? Systems Academy. So he's got because he's super at coding, I'm sure he's going to have a team of guys there who love coding. I reckon we should pitch that to them as a project, because those guys have done a lot of work on like programming context and things like that. So, okay, so what do you do here? You've got 7 bear bars in a row. We're always in short. We're low in a trading range, but I don't want to buy above 29. I feel like this needs a second piece. I'm also low in a trading range, so taking a trend continuation setup like a low one. If they're going to fail low in a trading range. Same as high ones fail. That was my sell on 23. So someone bought below 27. Yeah, exactly. Get ChatGPT to pump through it. One thing that annoys me with ChatGPT is you kind of got to be good at the thing you're asking it to do, because it invents stuff. Or like PineScript, I'm okay at PineScript. So it does something, you're like, no, that's the worst way to do that. And then it'll go, oh, thanks for the suggestion. Yeah, here's another way. But if you're a beginner at it, AI is not quite at that stage yet. G'day, Richard. This is Richard's way of saying, Tim, can you make more TradingView videos? I don't use TradingView for trading, but for charting, it's awesome. It's like runs on every device, runs in a browser if you want. Change the layouts. It's just dead easy to draw stuff. You can very quickly write indicators, so you can quickly go through 50 to 100 charts if you want to test out an idea. Yeah, and then I trade off Ninja. See, I told you he was going to pitch it. Okay, Richard, I'll do it. I have been talking it up for a while, TradingView videos. Okay. G'day, Tim. Tim's going to tease me about having too much nonsense on my charts. It's a fair call, sir. It's fair. Make sure you DM Tim Stout so he can cameo on these Euro sessions. So we've got 24,000, big round number. We're kind of oscillating around at the moment. We never went below the low on the daily chart. The bears tried once. We met with a bull micro channel. Even though this might get a second leg sideways to down, we'll see this as a high-low major trend reversal, and probably going to looking to buy or scale into buys around here. Still in a trading range. So bulls want to double bottom 29.30. I think traders that are buying down here are probably going to buy and scale in lower, betting that's not going to go too far below here. And we're back at 24,000. Yeah, well, TD365 is a broker with CFDs, so it's going to be different to the instruments on TradingView, depending on where you get your data from. All right, I think we've done 5:30, 3 hours, nice. Well, I hope everyone got a couple of trades on. I mismanaged my first short and then did well on my second, third, fourth and fifth shorts. Wasn't able to buy here, didn't like it, was quick to get a reversal down. And then, yeah, so not a perfect trading session for me by any means, but worked out okay. Thanks very much for everyone that's joining. We've got the US trading room a little bit later on with the team. Feedback, please send a message to Richard or myself. Please also hassle Tim Stouts, because we'd love to get him on the Euro stream, and we'll see how we can fit it into the regular programming. Thanks very much, everyone. Look forward to catching up next time. Cheers.